there might be some dubious positioning of troughs. But I'm fairly confident about this analysis. But it is important to realize that this FLD has been plotted based on the average wavelength of the 40-week cycle that's been found in the analysis. Now, if I was to move one of these 40-week troughs, if, for instance, I was to move this trough from July of 2010 until September of 2010 to position it over there, and I said that actually that is the trough of the 40-week cycle, then of course that would give me a different wavelength for the 40-week cycle. Okay, so we'd end up with a different average wavelength, and the first thing that would happen is that your FLD would move. Okay, so bearing in mind that if are not set in stone, the other thing to be very aware of is that VTLs are even more subject to change and to fluctuation, because VTLs are directly based on the positioning of the troughs, and as a result the peaks in the analysis. So VTLs are even more subject to variation, and a VTL that has been plotted on your chart and that you're making a trade on the basis of might very well disappear tomorrow. When the analysis is updated. As a matter of interest, and as a little bit of an aside, but as a matter of interest, when Sentient Trader enters a trade on the basis of a VTL, if that VTL then disappears off your analysis, Sentient Trader actually handles that, because it understands that the VTL disappeared because the analysis changed. Okay, but nevertheless you have entered the trough. You've entered the trade on the basis that a particular cycle had formed a trough or had formed a peak. Okay, so Sentient Trader will handle it in the way that you should handle it as a trader, which is that if for whatever reason your analysis changes and you have made a trading decision on the basis of a particular analysis, then you need to monitor your trades very closely. And if your analysis has changed in such a way that it looks as if though you are in a long trade and in fact the cycle that you're trading is not moving up but is actually still moving down, then you should exit that trade immediately. Simple as that. Okay, cut your losses and get out of it. But that was a bit of a diversion. I see two questions. One from Lucas. What is the length of the average for the VTL? Okay, Lucas, VTLs, or valid trend lines, are not based on the average. VTLs are drawn from one trough to another. So a VTL will be a line that connects two troughs. So for instance, the 20-week VTL, according to this analysis, would connect this trough here and that trough there. So there's no average length used for the VTL, but perhaps you mean the FLD. What is the average? What is the length of the average for the FLD? Well, what Sentient Trader does is, having performed an analysis, okay, yes indeed, having performed an analysis, Sentient Trader has identified the positions of the cycle troughs, okay, which I'm busy drawing some sort of squashed shapes around. Okay, so those are the troughs of the 40-week cycle. All right, Sentient Trader performs a phasing analysis, which means it identifies where the troughs of the cycles have occurred, which is of course what phasing analysis is all about. Sounds easier than it is, but Sentient Trader does it all for you, so it identifies where those troughs have occurred. Okay, and then it simply calculates the wavelength as being the distance from one trough to the next, and it then averages them. It doesn't go back over all time. As I'm just about to answer that question, how many of those troughs are used in the average calculation? In fact, the number of troughs used is based on the way in which Hurst himself used to calculate it. Hurst used to use 180 bar charts. So for daily charts, he used to use 180 bars. And so what Sentient Trader does is it goes back 180 days for the 40-day cycle, which should give you approximately 6 cycles. So for the 40-day cycle, Sentient Trader calculates the average over the last 6 cycles, and for the longer cycles, I think it does approximately the same. It works out at approximately the same. It uses the last 6 cycles, but in fact it does it in a sort of a Hurst purist, obsessive compulsive sort of way, by working out how many weeks are 180 weeks and then working that out. But it is roughly 6. Okay, so that's how it does the FLD. So the point that I was making is that last week on Friday, price crossed down below the 40-week FLD. Now, there's some things that I look for when price crosses an FLD. The first thing is that you want the cross, if it's going to be a good, clean cross, you want the price crossing of that FLD to happen at roughly right angles. So you can see here is a good clean price crossing of the FLD. You can see price crosses nice and cleanly, okay, and it forms a nice cross. The other thing that you so let's just zoom in here. So what you can see is that in last week's price cross of the 40-week FLD, indeed price did cross nice and cleanly at a good angle, okay. However, the fact that price yesterday sort of crept above that FLD makes it a slightly messy cross. Now, Hurst did speak about the fact that often price crosses down below an FLD, then will cross up above it and cross below it again. So it crosses down below it, crosses up above it, and then, and I'm not making a projection here, I'm just saying if this does happen, if price crosses below it again, you would have multiple crosses. So in fact, price crossed that FLD there, and there 3 times if price goes down, and in fact you should consider the median point between those 3 crosses to be the actual true price crossing of that FLD. Now, I do believe, for various reasons to do with this analysis, the price is going to continue going down. It might bounce up for a week or 2, but it must go down towards the 40-week cycle trough, which I think we still not encountered in price. I believe price still has further to go down. So I would expect price to drop further and therefore to cross this FLD more cleanly. Even if it is a multiple cross scenario, in which case the price cross of the FLD would be calculated at being at a slightly different level. It wouldn't have happened on Friday. But the other thing to point out is that if the wavelength of this cycle, the average wavelength that is being used by a sentient trader, and as you can see, the average wavelength is presented down here at the bottom right-hand edge of this chart over here. The average wavelength is 33.6 weeks. If that average wavelength turns out to be only a few days wrong or incorrect, then this FLD line would by just a few days to the right or indeed to the left. Now, if it was shifted to the left, that wouldn't be a problem for us in terms of what we're trying to do, which is closely monitor the market. If that FLD were to shift to the right, in other words, it turns out that in fact the wavelength of the 40-day cycle is not currently running at 33.6 weeks, but should in fact be running at the true average length is about 35 weeks. If the true average length was 1.5 weeks longer, then that would cause this FLD to shift by half that amount to the right, but it would shift 5 days to the right, 1, 2, 3, 4, 5, which would mean that that this little pattern over here, where price crossed, would in fact be correctly positioned on the chart over there. Okay, so what am I saying? Price crossing that FLD, yes, it happened according to this analysis. But everything that one does when working with Hurst cyclic principles, everything one does comes back to the analysis. And so it's very important to realize that if the analysis were to change slightly, and we were to realize that in fact the average wavelength of the 40-week cycle should be slightly longer than it is, then that FLD would have shifted to the right, and price would not have actually crossed that FLD. Okay. So as Lucas says, we might not yet have crossed the FLD. Exactly. Okay. So what are the implications of that? Does that mean that we can't do anything? No, not at all. In fact, the implications are not very severe at all. What are the implications of price crossing an FLD? Well, there are three pieces of information that we gather or glean from price crossing an FLD. The first piece of information, as you will know, is that when price crosses an FLD, the peak of that particular cycle is confirmed. In other words, when price crosses below an FLD. So if price has crossed below this FLD, then we can confirm that this is a peak of the 40-week cycle. But now we have in fact already confirmed that fact because of the fact that price has crossed below the 20-week VTL. So in fact, whether price has crossed below that FLD or not doesn't make any difference in terms of confirming that peak. Okay, I see a question from Nathan. The FLD going downward for a few weeks, so can we expect price going a little higher? Yes, I think what you're about to say is what I'm about to say about the FLD, which is that the direction of the FLD tells us, and as you can see, I think this is what Nathan is saying, because the FLD over the next few weeks is going up, that tells us. Now, there's a subtlety here that's very important to bear in mind. That tells us not necessarily that price is going to go down, although the implication is the price is going to go down. But in fact, I'm going to split hairs here, and I'm going to be very careful in terms of how I say it. The fact that the FLD is going up tells us that that cycle is influencing prices to move in the opposite direction, in other words, down. Okay, so as Nathan says, the fact that the 40-week FLD is going up tells us that the 40-week cycle is still influencing price to go down. Okay, now, why am I being so careful about how I express that? Why don't I just say that means the market is going down? Because the markets, of course, are a combination of an infinite number of cycles. It's very important to remember that. And the fact that one cycle, it might seem like a really important cycle to you, but to the market, it's just one of an infinite number of cycles. The fact that one cycle is causing prices to move downwards does not necessarily mean that prices will move downwards. Of course, when we start showing a bigger picture and looking at all the other FLDs, we know that in fact there are many cycles that are still causing prices to go downwards, and so for that reason we do expect price to still move downwards. But it is important, I think, to be fairly careful with the definitions. I see a question from Bruce, and he's asking Paul, what key combo causes the FLD line to be highlighted? Okay, I'll let Paul answer that. There we go. Okay. I'm actually